the evolution, the developments in confidence indicators for the whole economy on the left-hand side and for the industry on the right-hand side. And you can see that the two are very much correlated. It means that the very strong rebound in economic confidence seen after Q3 2020 was primarily driven by the industry. The industry has actually provided the strongest contribution to growth. Well, I would say almost full contribution to growth, as the service sector has remained very, very depressed until Q1 2021, at least, when services were able to restart and to operate almost at full capacity, because these were shut down by governments due to restrictive measures linked to the pandemic. So the industry has provided a very, very strong contribution to growth. But then, as I've said, the economic landscape is changing, has started to change since August this year, and then you see economic confidence has already started to ease, as well as industry confidence, reflecting let's say the worsened outlook and the concerns due to the supply chain disruptions and inflationary concerns. So the economic momentum which we've had up to Q1 2021 is already easing and appears to be already over.
Yeah, excellent. And basically, we're modeled after an initiative which is called the Poseidon Principles. And many of you may have heard of that, because, of course, shipping is also an important part of the steel sector. Basically, what happened with the Poseidon Principles is that 11 banks or 11 signatories signed up to this agreement, which basically said, okay, we are committing to a climate goal jointly as banks, and we're going to set certain requirements on our clients, which mainly relate to reporting, because if the clients report in a certain way, then the banks can subsequently collect all that data and then report to their stakeholders to say, okay, this is where we are. They started with 11 signatories, and that increased to 27. And that created a 2.2 billion sustainability-linked finance market in the first 18 months already. So not only, and then I come back to the point of engagement, not only was that there to basically say, okay, the banks are going to align themselves, but it also created incentives, right, and clear targets that you can introduce into the structuring of sustainability-linked finance instruments. Say, okay, this is Poseidon Principle aligned, so if you reach that goal, you're going to get a little bit of discount on your margin.
Some of the key projects which have been announced in the past couple of years and this year as well are majorly infrastructure related. As you can see here, we have infrastructures which includes the Etihad rail, for example, which is a very ambitious project in the UAE. Just 2 days back, it was officially announced that the Etihad rail, which was just a goods transport service, would be connecting 11 cities across UAE and would be helping in mass transit of passengers across the UAE as well. So mainly the governments in the GCC, whether it's UAE, Oman, Qatar, Bahrain or Saudi, are focusing on infrastructure projects. Previously, there were more of oil and gas projects, but there has been a shift towards non-oil segment and particularly the infrastructure. Another key focus, especially for the UAE government, has been on sustainability. We have projects like the waste energy plant in Al Dhafra, and we have like independent reverse osmosis project, where we are basically focusing on renewables. We are focusing on renewable energy. And then there is, for food security, there's the Khalifa Port project, which is the silos and grain storage processing plant, which is focusing on sustainability and food security.
Coming back to the investment arena, for the investors, the world has become a more riskier place because less visibility, more unprecedented events, etc., makes the investors more risk averse. When there is more risk, the investments that they decide to make are less, but also their return expectations are high. When you consider from commodity trading perspective, it's a low margin business already. So higher return expectations in a higher risk in a low margin business, how does it work? very difficult. And the funds which were already deployed, the investments which were already deployed in commodity trade finance, has better places to go nowadays. So essentially, there's liquidity in the market. There are players who are still eager, if not have to, invest into the market, but the money is shy. It's waiting for the best project, ticking many boxes, which is not very easy to find.
Now we still have exports to Saudi. It's not that it has stopped altogether. Of course, we are at a price disadvantage as compared to the Saudi manufacturers, but I think the Saudi government has probably done this to boost the local manufacturing segment. We are at a price disadvantage as compared to them, but it's not that exports to Saudi have stopped altogether. And we have been hearing news that because of the friendly and brotherly relationship between Saudi Arabia and UAE, it might just be cancelled in the first quarter of 2022, and we are hoping for the same.
Yeah, I would think so. The costs are estimated for the steel sector to be roughly 1.3 trillion. But if you look at the status quo situation, it is roughly 1 trillion. So, there's an additional 6 billion per year of capex required to get to net zero, which is still a lot of money. But I think if it prevents the world from overheating, that should be worth it.
For the time being, we have the luxury to ask this question. Is the cost worth the benefit? Going forward, we will be forced to take this. And I will invite the players to consider, because we are, with certain projects that we are involved with, we are aware that certain multinational financing institutions provide contribution to these kind of costs. So this is the time to reach out to them. So early bird story. And eventually, at the end of the day, this is the same story with the economic substance automatic exchange of information. If you don't comply, your accounts will be closed. Why? Because we don't want any bank dealing with these countries to have these clients. So at the end of the day, you have a company, you have a bank account which doesn't function. So this is going to the green finance story as well. We are at the very early stages. I think there is opportunities lying there, and I encourage the players to reach out to them. Thank you.